Alrighty, so we have a general tax question, Neil. So, what are some common tax filing mistakes people make, and how can I avoid them?
Yeah. Okay. It's like I just go down the form itself. Oh, incidentally, this is not related to tax filing mistakes necessarily, but the in the tax professional world, when it comes to how things are entered on software, there's different software paradigms. Everybody's familiar with TurboTax. TurboTax uses what's called the interview method, where it asks you a bunch of questions, and then based on your answers, it fills out the tax return. Then there is the worksheet method, and that is on the tax professional side. There's a bunch of worksheets. You fill them out. It takes the information from those worksheets and it creates a tax return. I dislike both of those. So I prefer what is called the forms method, where you're actually looking at the tax return itself and you're looking at, okay, in box one, this type of information goes. And then you start to, from there, you dive into, there might be a worksheet or there might be a data entry field or whatever. But it gives, at least to me, and maybe it's because this is how I was trained up in the tax world, is that it makes sure that you don't miss anything because you're looking at the things like, okay, there's wages. Do we have wages? Yes. Okay, got to put in the wages. Okay, we have, next line is interest. Do we have interest? Yes, we got to put in the interest. And it makes sure that you don't miss critical things. When I go down the form in my mind, that's what I'm seeing. But okay, things that create problems. There's different kinds of problems when it comes to errors on your tax return. There's ones that guarantee that you'll have a problem, and there's ones that might cause a problem, right? And so the guarantees is when you have an information mismatch. Again, just going down the form. First thing is your name and social security number. Make sure that's actually right. Make sure. So, like my last name, McSpadden, right? My entire life, we spell it as me, my family, everybody spells it as one word. It's capital M, superscript C, but I just do it lowercase because superscript is a pain in the ass. Capital S, and then PADEN. On my social security card, when I was born, it's MC space SPADEN. So for official tax purposes, my last name is two words and not one word. So it's just weird things like that can cause issues. If you're a junior or a third or whatever, that can be an issue. So make sure that your name matches your name and social security number matches what's on your social security card. That's number one. Same thing with your spouse, same thing with your kids. We had one client named Marcos, and so he was married. He had two kids, both boys, and he was named Marcos, and both the kids were named Marcos. And they didn't have a junior, second, third. It was just Marcos. So like internally they called them different things, like they had different nicknames, but that's just they were all just Marcos, whatever, and they all had different social security numbers. So I remember when I first did their tax return the first year, I was like, is this right? But yeah, so make sure that your names and numbers match what the IRS has. Also, for myself, when I got married, my wife, she she was doing the name change thing, and the forms were confusing. And so on like her driver's license, her maiden name ended up as her middle name, but on her social security, it ended up as hyphenated. So it's this crazy long name because she had a long name and I had a long name. There's issues like that. Another issue when it comes to just the we're still at the top of the form. If you're married filing separate, you got to match. The two spouses have to both file married filing separate, and they both have to reference the other social security number, the other person's name and social security number. There's that. A slight exception to that if they live apart, there's a kid, whatever. But by and large, they got to match. So then, as we go down the form, there's your information, your address. Whatever address you put in, that's where they're going to send mail. Make sure that is correct and that you're able to access the mail from whatever that is listing. The kids or the dependents, make sure the names and socials are correct. Make sure that the birthdays are correct. We've seen an uptick over the last several years with dependents getting identity
Mhm.
theft protection numbers. We had one case where the client was not aware of an identity theft protection number, but the system rejected the return because it says, hey, we're expecting an identity theft protection number. So that was a whole issue because your identity is quite valuable and scammers out there will steal it. So that is other things to check. And then the, and then we get into the actual data. So make sure that you don't miss anything in that, like there have been cases, oh, my camera's about to fall over. Let's see if we can face this. No, don't want to show you the green screen. So the so people sometimes forget they had jobs. That's not great because this is a third party report, right? So the company will send you a W-2 and they'll send the IRS a W-2. And if you have a state income tax, they'll send the state a W-2 as well. If you leave that off, you'll get a letter, guaranteed. because it's a computer matching issue. And if you get a letter from the IRS that starts with the letter CP, that means computer processed. So that means it was automatically generated. There was no human involved. It's just there was an error or a mismatch in the computer, so you're getting this letter. Make sure that you include all your forms, all your 1099s, all your 1098s. You don't have to include, but you probably should because they're to your benefit. W-2s, all that kind of stuff. Make sure that they're all included and you're not missing anything. Because what happens, so we had a case of this about a month ago where a client got a letter from the IRS that says, hey, you owe whatever it was, $8,000. And we went back and forth and we figured out what happened was that the client had gotten some company stock that he had forgotten about and he had sales and it was taxable. The way the IRS looks at it is they've got a sale amount, they're going to assume that was 100% profit. Obviously, that was not the case. So when we actually went through the whole thing and we amended the return to include the correct information, says, okay, yes, there was a sale of however much company stock there was, but he also had to buy the stock, and the stock went down, so he actually had a net loss. So he actually was owed a refund. But it would have been better to not have to go through all that and just report it correctly on the front end. So make sure you include all sorts of income because that is a legal requirement. Other things, pet peeve of mine is 1099Ks. So 1099Ks are the third-party processing reports. And if the IRS is to be believed, we're going to get 31 million new 1099Ks this year compared to previous years because there was a rule change. Again, Congress changed the rules. Under the old rules, if you had a payment processor, like American Express, for example, and you had at least 200 transactions a year, and the total dollar value of the transactions was exceeded $20,000, then you got a form. And again, just like a W-2, they give you a copy, they give the government a copy. The rule change is that there's no longer a number of transactions requirement at all, and the total processing volume threshold is now $600. So if you process more than $600 worth of payments, then you're going to get a form. Here's the problem with that, is that people, they hear about this and says, I don't take American Express, I don't take credit cards, it doesn't apply to me. But what they forget is that there's lots of other payment processors too. There's PayPal, there's Venmo, there's Zelle, there's Airbnb and VRBO. Those all process payments on your behalf. And so there's a lot of people who are going to get these forms and not know what to do and end up probably paying too much tax. Because just because you got a 1099 does not mean that's all income. If you have your friends reimburse you for dinner on Venmo, that's not income. That's a reimbursement. We're still waiting on the form updates from the IRS as far as how we're going to have to report all this, but you got to be careful about what is actually going on. We'll see how that goes. But what a lot of people screw up on is when, let's say they start a new LLC, they're starting a side business with whatever, they sign up with Venmo or whatever. Like I pay my lawn guys in Venmo. My daughter's piano teacher, he takes Venmo. And when you sign up for these platforms, it'll have you go through a W-9 process. So that's the form that lists out a recipient's taxpayer identification information. And at the top of the form, it says name. And then it says, what kind of entity are you? And then it says, what's your social? So it's got two boxes. It's got social security number. It's got EIN, identification number. And you only fill out one of those. So what people do by mistake is they put in their own name and they put in their own social because that's what it looks like the form says. But the name, you got to remember, a company is a separate taxpayer. It's a separate legal entity. It has its own name. It has its own tax identification number. So they end up, maybe they started an LLC and they have a bank account and it's all, separated, but then they sign up for the payment platform under their social. And now they're getting a 1099 to their social instead of the company. And then we have to go through a process of correcting that. And it's just a nightmare. So if you get nothing else out of this, if you ever sign up for PayPal or Venmo or any of these, use your taxpayer identification number from your EIN, your employer identification number of your company. Just general tip, you shouldn't be doing business in your personal name. You should always at least have an LLC. And I know technically that could be construed as legal advice. I'm not a lawyer. I'm definitely not your lawyer. But that's my experience as a tax guy. Have an LLC at the very least and have its own EIN and have its own bank accounts and all that kind of stuff. So that's a major error that we see a lot. We had an issue with that on a client recently where he's got a bunch of companies. And then we were looking through his tax transcripts and he has his 1099K under his social security number, $170,000. And we're like, what does this go to? And He didn't even know. And then we had to go back and forth. And then he figured out what company it should have gone to, and we had to do a correction. So don't do that. Other issues, the IRS. How much time do we have? We're at 6:45. All right, I'll just do one more.
Okay.
The IRS puts out press releases every year about tax scams. Make sure you are not a victim of one of them. If you ever under the current versions of the tax forms, 1040 page 1, 1040 page 2. The middle chunk in the second page is the credits. And these are refundable credits, meaning that even if you didn't pay in any money, the government will still pay you. So these are very valuable pieces of information. And a lot of scammers out there will just put in numbers and say, oh, I can get you $12,000 because you're putting in this number. And yeah, the tax return will say $12,000. But then when the IRS comes looking for that money, then you're stuck because you're going to have to end up paying it back plus penalties. I'll give you my favorite example of this. And if you ever see anything related to the federal fuel tax credit on your tax return, run for the hills. So in this particular case, this was back when I was working in Florida, and new clients come in, husband and wife, very nice couple, and we're working through their tax return. And they said, oh, and by the way, we got this letter from our thing last year. We never got our refund. I said, okay, let's look at the letter. And it was a letter saying basically that we're not going to give you your refund, and we're charging you a frivolous tax return penalty of $5,000, which I was like blown away by. And I looked up the code that it referenced, and sure enough, there is an Internal Revenue Code associated with frivolous tax returns, and the language is basically saying that this return is so fake that even just looking at it, we already know you're just lying. So I said, okay, do you have your last year's tax return that we can look at? And I'm looking through it. And so the wife was a teacher or a nurse, one of the two, and the husband was an engineer. So I'm looking through it. They got a W-2 and they got a mortgage and normal stuff. I didn't see anything that indicated being a frivolous tax return. So I told them that. I said, there's nothing here that would warrant this letter. What you should do is you should go get your transcripts from the IRS. And this was before the web systems really worked. So you had to call and they had to mail them to you or fax them. It was the whole thing. So they come back a month later and they show the transcripts. And sure enough, on the transcript, it shows a federal fuel tax credit of $4,000. And I say, okay, that's the issue. And what happened here? And we do some conversating back and forth. And what we figure out was that they went to the person they'd gone to the previous year, prepared the return and they signed it, and it was just a normal tax return. After they went out the door, the guy added in the federal fuel tax credit to juice the return so that he could get a bunch of money. And he filed it, and the IRS noticed, and then they charged the couple with the frivolous tax return penalty because there's no explanation for a teacher and engineer to have a federal fuel tax credit. It just doesn't make any sense. Which I agree with the IRS. That doesn't make any sense. But in this case, it legitimately was not their fault. And I went through this whole explanation with them. And I told them what they should do is they should go to the Taxpayer Advocate Service, which is an internal department in the IRS that helps taxpayers with issues where they can't get satisfaction, basically. And they should report that tax preparer to the Advocate Service. And hopefully the Advocate Service can help them get their money back. And then they tell me, oh, it was my husband's brother that did it. So we're not going to do that. And they just ate the $5,000 penalty.
Wow.
And I don't know how Thanksgiving went that year, but it's
Not good.
it's not good. Not good.
Yeah.
There are pieces of information that you can put into a tax return that will still file, but will cause you massive grief on the back end. And you want to avoid all those. So basically, any kind of scam, anybody who says that I can get you this because of some nonsensical explanation, run away.
So, Neil, I have a funny question for you.
Yeah.
What did the tax auditor say to the taxpayer who wanted to play hide and seek?
What?
Good luck, but I always find you in the end. I thought that was so funny because we were talking about doing taxes incorrectly or wrong or fraudulently.
Yeah.
Stay away from that kind of stuff.
Stay away. Run away.
Yes.
Yeah, and they're slow, but they will catch up to you. It takes them a few years in most cases, but yeah, they will come around to it.
All right.